Yeah, thanks. So we're delighted to be here. The purpose of today really is to give you, to end up giving you some practical guidance on where this will lead. Obviously, the good news for everyone is still just under 4 weeks before you have to implement. Before you need to implement 3 different things: senior managers regime, some important aspects of the certification regime, and implement the conduct rules. The way the rules have been framed, actually the categorization of your firm determines just how significantly it'll impact you. And I think our assumption, I think for most of the discussion, will be the majority of the firms here are core firms, but the other alternatives are an enhanced firm where it has been a pretty horrendous project, where governance and many things are captured, or there's sort of limited authorization firms like general insurance brokers. So our assumption is you're mainly here representing CFD firms and other brokers where you've been categorized as core firms. And what we'd like to do is cover, at the beginning, what we'd like to do is just cover the ethos of the rules, what's been behind it. Obviously, where the rules have already been implemented for banks and for insurers. It's now moving on to the rest of the sectors. And I'd like to hand over to Sarah to just give a broader explanation about how the implementation has gone for some of the earlier adopters and what that kind of means for you.
Okay, so I guess I'll start just with the background and really the intent of the regulation and its rollout. Essentially, from my perspective, it's quite culture-based. So it's around making sure you've got the right culture in the firm from the top down and from the bottom up. And that's addressed through the various sections of the regulation that Mazur covered. So you've got the senior managers, and then you've got the certification, which is really the next layer down, and then you've got the more general conduct rules, which all employees are bound by. And essentially the intent is to make sure that there's responsibility and accountability and ongoing good practices within the firms. And that will need to be demonstrated in various ways. So today, under the approved persons regime, we have approval via the regulator. Some of that validation and verification will move more onto the firm. So what they do today, when they put forward controlled functions for approval, will still exist, but they'll really have much more of an obligation about proving that they are confident that the people in the right seats are the right people and continue to have the fit and proper test applied to them. So in terms of how it's already been implemented, I think it's interesting actually, because a lot of the very large firms that have bank chain entities, as you rightly say, from a bank chain legal entity perspective, would have already put this in place. And it's important to note the regulation applies at legal entity level. So if you've got individuals across various different legal entities that your organisations might operate through, you have to be quite careful when you're looking at that and making sure that you've got the right demarcation and really looking at it through the legal entity lens. So in the larger firms where you have businesses that go across multiple different legal entities, despite the bank chains only having the obligation when it was first brought in 2016, it's likely that most of the bigger organisations took the view to apply the good practice, if you like, across all of their different legal entities. But of course, they've got the more formal obligation now. And I think that it is an opportunity, even if you've already had the obligation, to take a look at it afresh and determine, are you comfortable with the documentation you're capturing? Is there a way that you could update your training? So I think a lot of the implementation, although the rollout to the remaining areas within the industry is a great opportunity for those already captured to basically review how they apply the regulation. And of course, the ongoing obligation of culture, there's no start and end to that. It's an ongoing obligation.
Okay, but in terms of just picking up with two of the areas, I think two areas that you touched upon there were individual accountability.
Yeah.
Is an important kind of goal that the regulator was trying to achieve from this, and secondly, that overall improving the governance and culture of the institutions was a secondary objective. Could I get you, please, to just give us a flavour of whether you think that's been achieved, Matt?
I think in honesty, when I look at my banking clients and the approach that they took to implement an SMCR, most of them have applied the rules and the requirements, but it's taking some time to actually make the changes to how they run and operate their business. It's interesting for me because having, I do work with the FCA on occasion, specifically looking at 166 reviews as a skilled person. And one of the things that has crept into the 166 reviews is for us to look at the governance arrangements. And effectively, what we tend to find, and it's what the FCA have commented on, I was with the UK Finance Group recently, is that whenever they see that there are conduct failings, inevitably, in their view, the culture of the organisation isn't necessarily where it needs to be. And that's reinforced their views that SMCR is a tool that they'll use to manage and mitigate risks moving forward across the financial services marketplace.
Could I just get you, for the benefit of the audience, to elaborate on what culture would look like, what a good culture looks like from the objectives of this SMCR?
I think that would be a challenge. I think what we can really convey is that from a senior management perspective, each senior manager is required to have a statement of responsibility, and that document is meant to be all-encompassing, and in effect, it's meant to give the regulator, when needed, the transparency. So I think the regulator can use that new obligation for the rolled out firms to really have insight into the culture. So I think saying what a good culture is quite a challenge because that will differ firm per firm. And I think the regulation basically is saying you know your firm the best, make sure that you capture the responsibilities adequately.
Yeah, and I think the regime is primarily focused on ownership. So ownership and accountability, and that's what the statements of responsibility will provide. I've reviewed a number for some of our clients, and what I would say is that at the moment there is still a lot of crossover in terms of how they are splitting responsibility, or certainly how they articulate it. And when you sit down with the senior managers and get them to explain what they do and how they do it, essentially what the FCA wants is they want a route map of who they need to speak to in your firms in the event that something goes wrong. Now, if your statements of responsibility aren't clear and aren't precise, then that means that all of your senior management population potentially could be caught up in the discussions. Whereas if it's very, very clear, because all of your businesses will be slightly different, slightly nuanced in how you operate and how you deliver your services, that is a key thing that I would say to take away in terms of your statements of responsibility. Make sure they are clear, and also make sure they're complete. There is no obligation on any of you to do a responsibilities map. I would argue that it's a reasonable step that any senior manager should do to make sure there's nothing that's falling through the cracks.
And I think as well, of course, there is absolutely no downside, and actually it's a business benefit to reasserting who's responsible for what within an organisation and making sure the individuals themselves are aware of that. I think a lot of the business that we interact with is extraordinarily complex, and there can sometimes be differing views which often a regulation is quite helpful at pulling out and bringing out, particularly to the extent this is going to be documented, and it has to be a clear documentation that starts and ends within the documentation. So it's not intended that the document says, I'll refer to this other document. So it's meant to be concise and clear, and that can be very helpful for the business itself. So that is a benefit that can be brought to the business through application of the regulation.
Sure. So the purpose of that section was just give you all an introduction, and obviously we'll be happy to take questions throughout. So if there's something that anybody has a burning desire to raise as we discuss, just raise your hands, and I'll pick you out. So that's given an introduction to the ethos. Where we are, obviously, less than 4 weeks to go. 3 different aspects. We've got the senior managers regime, where, as I said, we've assumed most of you are core firms here. So there's a limited number of people that will be caught by the senior managers regime. You'll have the chief executive, which is, so this, what was CF3 now becomes SMF1, and it's automatically grandfathered unless you want otherwise. You've got the executive directors, i.e. the CF1s, moving on to being SMF3s. We've got a chair, which is the third of the roles that applies to the chair of the board, which is often a non-executive role. And then the only other two, apart from partner, which probably doesn't apply to many firms, the only other two senior management functions are the SMF for compliance and for anti-money laundering. So the work on SMF is relatively straightforward. That actually largely has been grandfathered, and the points that were made earlier about the statement of responsibilities and being very clear there are probably your biggest challenges. What's far more interesting, obviously by the 9th of December, you've also going to have to implement the conduct, have really given training on the conduct rules, and also have begun to implement the certification regime. So although there's another year for the certification regime, you've got to be identifying now who's caught by that. And that's one of the more interesting areas. So again, can I just hand over to you, Sarah, to talk to what are the main certified functions that you'd expect these broker firms to be allocating, and what does that mean in terms of, what does a fit and proper assessment for those types of people mean? What has the change of focus from the FCA doing the checks on the individual to the firm doing the checks made?
Okay, so as part of the movement from the approved person regime into the SMCR regime, the certification element of that means that today, where there are some control functions which go to the regulator for approval, the responsibility will move from the regulator to the authorised firm to certify that certain individuals that may impact and create risk if their role isn't done to the extent it should be, could create risk for the firm. So I guess a good example of that, you mentioned it, is a non-executive director. Today they're approved by the regulator. In the future, the certification regime will capture that role, and it will be the authorised firm's responsibility to demonstrate that the individual is fit and proper based on the checks they've done. I think what's really interesting is despite the guidance outlining that if you are in a group where there's a mixture of firm types, so an enhanced being the highest type within the group, there's nothing stopping the firm as a whole taking the view that although not all their legal entities meet the enhanced criteria, actually they want to apply that enhanced level obligation. So I think in terms of certification, the onus does move to the firm. There will be certain steps they will need to go through. So you mentioned fit and proper. There's various checks that need to be done, which by and large I think is expected are done already today. So these are criminal record checks, but also there's a new concept of a regulatory reference whereby that changes a little bit. So former employers will be contacted, and there'll be questions around: have any conduct rules been breached? Has any remuneration been required to be clawed back? And those sorts of things. So there's a lot more potential for communication, authorised firm to authorised firm, that we haven't seen before. And whilst most of the questions are asked through the approval process today, it's where that responsibility lies to kind of identify and ensure that the people that are in the certified level roles are fit and proper to be so.
I suppose one of the things that I'm seeing with my broking clients at the moment is the challenge around how do you identify who should be captured under the regime. And I think the FCA has probably positioned this perfectly, because there are so many different varieties of firms, there are so many different individual roles that people carry out, and putting the onus on you as your own businesses to decide who do you think poses a risk of significant harm. I think that was a key, it's a game changer for me in terms of the industry, and also the requirement that if you have a member of staff that is certified, that the line manager also requires certification. So those two things have made it a little bit broader, a little bit wider than normal. The FCA produced some additional commentary around, what do they mean by client dealing? And I know certainly within my financial planning businesses, clients, that they are slowly coming to grasp the little nuance that was introduced, which was around if you are doing a role that A, requires qualification, and if you, in discharging your obligations, you need to make decisions of a subjective nature, then arguably, as far as the FCA is concerned, that should capture you under the regime. And I would imagine that within your broking businesses that there's quite a lot of individual roles where you require the role holder to hold some form of formal qualification, and they are, to a degree, exercising some skill and some knowledge, some technical ability in order to discharge your obligations. They should be captured. They may not be captured today, but they need to be captured. So the process of identifying who falls under the scope of the regime is key. And it's key because you need to ensure that they've been trained on the conduct rules by the 9th of December. One of your senior managers in your business will hold the prescribed responsibility for delivering conduct rules training. And if they haven't delivered that training, then it's difficult for them to be able to demonstrate they've taken reasonable steps. So if you haven't gone through the process of understanding who should be captured, now's the time to ensure that you've caught all relevant individuals and then deliver the appropriate training. You should also bear in mind that the FCA published a report in early August, and that made reference to some of their observations of the implementation within banks. And the fact that for them, in their view, there were a number of people who hold certified roles who didn't necessarily understand the link between the conduct rules and what that meant as a certified individual. The Bovril message on that is that when we are providing training certified staff, we do it face to face. We struggle to see how computer-based training can ensure that all of the different individuals have the full appreciation of what it means in their role. So that's something that you need to consider. If it's not in train, you'll need to get that in train pretty quickly.
Just to follow up as well, what clearly the message there is one size doesn't fit all. So a lot of you will have international offices. You will have you'll have some people who are doing functions where they're not as employees per se. They may be employees of a group company, and the nature of that means that two key factors. One, there's extraterritoriality with these rules, so it doesn't matter where the person performing the senior management function or the certified function is located. It's actually what role they do. And also, it has a very key kind of impacts with outsourcing, because the definition of an employee, again, is broadened. So can I just say, so the question there from Salam, yeah.
Thank you, Mazar. I'm struggling to see a major difference between the current rules and the senior management, because the responsibility and accountability is always on the companies. There's always training required. There's always one size cannot fit all. Yeah. Where is the major thing? I think that I see the senior management regime is just a bit of more formalities and or logistics bit, but I can't see the responsibility and accountability is always there.
That's a good question, Salam. What actually has happened, as we opened with where the other sectors who have already implemented this have gone, and what you'll find with the banks and the insurers is when the FCA come in now for something that's going to lead to enforcement action, very quickly there's often further enforcement actions follow. So they're now looking at that personal accountability in a much more joined up way. And what you've also got now, under the rules, you've got prescribed responsibilities and a very clear statement of responsibilities. And what they'll do in interviews with people, they'll say, okay, right, Salam, this is your statement of responsibility. You're the chief executive. Show me what reasonable steps you've taken to make sure the people outside of your control are actually achieving, technically outside of your control, are achieving those. So in my view, it's actually, the personal accountability has become much more urgent, and also the degree to which there are now almost a prescribed statement of responsibilities as well, gives the FCA a bigger stick to beat us with. But I'll pass to the other.
I actually agree with your view, Salam. It doesn't really change anything. There is nothing new. When you look at the conduct rules, there is nothing new in the conduct rules for any of you, whether it's a senior management role or whether it's a certified individual that's holding the role. The difficulty I see is that if you are a well-run, well-organised, well-structured business, then implementing SMCR should be relatively straightforward, other than adding a couple of new procedures and formalising anything. It's relatively straightforward. With my better clients, with my more compliant clients, the journey towards implementation has been relatively straightforward. But as I mentioned earlier, I do get involved in doing Section 166 reviews on behalf of the FCA. And in most instances, what I would say is the governance structure is nowhere near as robust as it should be. There is a lack of clarity over who is responsible and accountable, and that's exactly what the regime is designed to fix. The fact that you from your perspective, you don't think there's anything new, actually is a positive. That's a real big positive. But for a lot of firms out there, this is a real upheaval in terms of implementing this new requirement.
And actually, just to add to that, Salam, there is enhanced firms where it's far, far more significant. There's a large number of required senior manager functions. There's a project that's had to go for a long time because governance now becomes key. I think one of the challenges that many of you've got here is that some people will be thinking, gosh, a deadline to be met, it's just an admin task, let's get it over with. The ideal scenario is you actually, in this process, improve your governance. Then you'll really get something out of it.
And Sarah, do you have anything?
Yeah, I mean, I think there is a definite risk, certainly on the certification regime, where because it's an event that has to be proven out annually, it could turn into kind of an admin overhead exercise in terms of the practical rollout of it. But I do agree that there is really not much new, because there is accountability and responsibility, and there is a conduct requirement today. And I see in the regulation an opportunity for firms to really do a dry run on their governance. So rather than test it at the point of a Section 166 and the like, it enables them to really do the litmus test and really take a look at their governance in practice, and does it stand up? So when you are speaking to somebody about what their responsibilities factually are, do they agree with it or not? Is there opportunity to move some of the what are now prescribed responsibilities and additional responsibilities that in-house are determined from one senior manager to another, because it makes more sense now that you're looking at it with a fresh pair of eyes through the lens of the regulation. So I think that you're absolutely right. Accountability and responsibility is always present, but like any reg, it enables a fresh discussion about it, which might not always be possible today with such further and kind of ultimate obligation to document it and have it crisp and agreed by all parties.
What I would caveat around all of this, though, is the certification regime, because this is new, and in most firms, then this is difficult. And I say it's difficult because what does that look like? And it's different for every single organisation. But underpinning all of this, from my perspective, is the ability to demonstrate that your staff are competent in their role. Now, T&C regimes vary vastly across the whole of financial services marketplace. If I go back 6-7 years ago, then I was working primarily with the banks, and the banks would argue that they're all fit for purpose. But when they implemented the regime, then most of them found it difficult in terms of having the appropriate evidence that they could put in front of a senior manager to say, yes, this person is competent and you can sign them off to deliver in that role moving forward. And that's a challenge that I would put out to all of you. Once you've gone through and you identified who is captured, if you've got a chief technology officer who's captured, how do you evidence that they're competent in their IT role? It's quite specialist. I've seen HR directors captured under the regime. Again, how do you evidence that they are competent in the role? It's not just the client dealing, it's not just the client-facing roles, it's much broader.
Yeah, and there has been some suggestion on, various chats that are, around, do you pull in the annual review process? And that is very typically a HR-based process between employee and manager. So to now have that, I guess, included as perhaps a measure, which can be evidence, is already captured. So if you're, from a firm perspective, you're thinking that's quite leverageable, is that appropriate or not? And each firm needs to decide, because again, the process at each firm, just on a review basis, changes firm to firm. So I think it is quite a challenge to have appropriate documentation that fits the bill, but also is workable and practical and pragmatic.
Thank you very much.
So basically, we're in the last 5 minutes. If there's any further questions, raise those, or I'll move the discussion more into. So obviously, what we've got is core firms, enhanced firms, overseas branches also get a special mention. So there are a number of senior management functions that can apply there. The certified functions will vary according to the scale of the company. So in a larger one of the core firms, you'd expect heads of department, right, heads of IT potentially to be certified, whereas in some of the more medium-sized firms, there'll be fewer. But the places where the challenges seem to come, in terms of prescribed responsibilities, I've actually seen difficulty allocating the CAS responsibility, actually. Yeah. Can I sort of bring it over to two of you? What other specific challenges have you seen on certified, on people decide? What other challenges have you seen on in terms of applying the certification?
One of the challenges that I see is in across all of the prescribed responsibilities, who takes it? Now, if you are a reasonably sized broking firm, you're going to have 2, maybe 3 maximum senior managers. And given the responsibilities under this, implementing the regime, you'd expect that to sit with the CEO. And then the question is, does the CEO actually want it? And getting agreement from the CEO that that's where it should sit. Ultimately, whoever holds that responsibility should be able to make all the relevant decisions to implement any changes as necessary in the business. What I also see is that prescribed responsibilities are proposed to be allocated to the head of compliance. I would challenge whether that's appropriate to do so, given that you would expect compliance to be monitoring and have effective controls that can satisfy all of the senior managers that the regime's been implemented and is operating effectively. If you allocate those responsibilities to the compliance officer, then surely compliance are just checking their own homework, and that helps nobody. So those are a couple of things to think about.
I think as well, just like anything, as soon as there's a degree of accountability from a personal level, people really do look at the fine detail. So I think the challenge probably is making sure that everybody is fully aware of what they're responsible for, having their agreement, and then making sure that's captured comprehensively and maintained. So you mentioned CAS just earlier. It reminds me a lot of CAS, especially some of the, I guess, the background work that needed to happen to kind of meet some of the newer legislation at the time. And I think it's the maintenance which is really key. There's lots of obligations around making sure the regulator's aware if a responsibility moves from one senior manager to another. The certification regime itself is designed for regular update. There will be a register of everybody certified. So I think the maintenance part is it's not a one and done, it's an ongoing obligation, and it should be treated as such.
Sure. As we're in the last few minutes, I think what I'd like to just focus on is key takeaways for all of you. In terms of, we've got less than 4 weeks to implementation date, and in my kind of suggestion would be training is going to be an absolutely crucial factor. If you haven't done the training yet to help the various people, particularly certified individuals, to understand how the conduct rules will will impact. That will be one key area. Another key area is being able to demonstrate. You've got to now put yourself forward. FCA is interviewing you. They've got your statement of responsibilities. How do you justify that you achieve those? Are two of the things that I'd have. I'll hand over to the other members of the audience just to.
Yeah. We have to
Okay.
Good.
Good.
Is there any, just before we end, any questions from the audience before we end?
Good.
So I want to
Thank you.
everybody. No, any questions? Okay. So I want to thank everybody for attending. And if you have any ongoing questions, if you do have any specific questions that you'd like to ask either Sarah, Maurice, or Mazar, they're here. They're happy to speak to you individually about anything. So thank you very much for doing the panel.
Yeah, thanks, Robin.